perspective for me of how long it takes cash to flow through this business as opposed to construction. And it helps me, if I know that information, I can make sure that I am on top of my line of credit, that I'm shopping for capital, that I'm trying to apply for loans, because the reality is in our plumbing business that things just take a lot longer to pay. Our clients hold retention until the end of the job, which sometimes could take us like 12 months to collect. So that impacts our cash flow substantially, and we have to keep that in mind. And then if you look at my AR here compared to my AR in construction, both businesses have a very similar revenue number, but my AR in plumbing is significantly higher, and that's just because of how long it takes me to collect. So, and my AP is lower because I'm not really paying subcontractors here. I'm really just paying, I just pay my vendors. So we just purchase material and we pay vendors. The other big difference between the two businesses is my payroll. So in plumbing, I have so many more employees. Like you could see in April, I had 48 employees here, whereas I pretty much have had 15, went dropped down to 13. Now we're at 14. Like we had a pretty consistent employee count in construction. I went from 48 to 38, so we went to 29, and we're actually at 19 right now. So it was a substantial drop. Partly we made a shift in how we were doing the work. We're subcontracting a lot of work out. So that changed the way that these numbers ran. So where my payroll at the beginning of the quarter was $55,000 a week, it actually went down to 22. So that's a big difference. And like I said, I'm calculating here my labor hours total, how many hours of work need to get done. And there's a certain production number that has to be associated with that. So if I'm paying for 1,800 hours a week, how much do I need to bill per week to make sure that those 18 hours are covered? Those are all things that we can calculate in our business. And so now I transitioned this to be 700 hours a week because I'm subcontracting a lot more out, like I said. Overtime, this is another big thing that we measure here because these are mostly hourly employees. So I need to make sure that my overtime is very controlled. You can see we were spending quite a bit of money in overtime towards the beginning of the quarter. And then that had a drastic shift in May where no overtime was allowed. And then obviously we got a little bit flexible. Somebody hit 1 or 2 hours, but that was it for the quarter. You can see we track holiday time. So like the week of July 4th, we had a bunch of holiday time being accounted here. Our head count, like I said, and then the potential hours calculation of people that were missing. So like this, honestly, I should probably look at this, like why were 60 hours missed over the 700 hours that were supposed to be there? That's a significant amount. That's like 10%. So, that would be like an indicator to me of, oh, I need to look into that. Why are we missing so many hours? And then clocking in and out. This is really difficult for my field team, but look, they're at 100%. So 100% of my team is clocking in and out. That's pretty good, especially when you look at construction. Like I said, these are all salaried employees and I'm only at 87%. So I got to get that one person probably to start clocking in and out over in construction. The last thing that I track on my finance sheet, which is specific to my business, so this is not in the template, is in the template that's for sale, is the purchasing. So we do a lot of our purchases through this program called Subbase. It's for vendors. So if you're in a trade business, I recommend looking into something like this where we actually send quotes to, or we send requests for quotes to multiple vendors through the software. And the software actually levels the quotes for us. So that means that they compare like prices from Ferguson and prices from Hughes on every line item in our quote and tells us like which ones to go with. So it's a really helpful software, and it also tracks approvals and it syncs with my QuickBooks. So it pushes, once I get my invoice, I send it to my project manager for approval. He approves it, match it with the ship ticket, and I push it to QuickBooks as a bill. And one thing that we were really trying to focus on this quarter was to reduce our pickups by 80%, because look at how I started the quarter. I started with 14 pickups a week. And meanwhile, I'm only doing 11 orders through Subbase. So I have more pickups than I do proper orders. And when you are not ordering through the vendor directly and you're not getting that quote, you're actually losing money because they're giving you like retail pricing when you go pick up. And when you put it in through a quote, you're getting better pricing. And you're able to price shop if you're pricing things out ahead of time. So I really needed to reduce the orders that were being picked up significantly this quarter. My goal was 80%, like I said. So if you look at the trend over the quarter, you can see that by the end of the quarter, I ended with 3 pickups, which is, I'm pretty happy with that. Even though the dollar value was almost the same as the beginning, just the fact that we're going there less is very important to me. And you can see like from 11 up to 24, it kind of went up and down throughout the quarter, but just ending on really solid numbers. So I was pretty happy with that. So anyways, this is the finance metrics sheet that I have for sale on my Etsy page. I hope that you got something out of this video, and hopefully just kind of that transparency and level of insight into a real life business is helpful. And I hope to do more of these moving forward. So, all right. Have a good one, and please like and subscribe this video if you enjoyed it. Leave me a comment and I will comment back.